Hello, my YouTube friends. So, why are the Crash Bros wrong about real estate, and why is the market not going to collapse this time? What's different about it? What's going on that'll keep the market above where it is and continue higher going into the future? Stick around for the video, and I'm going to talk about that and get into the housing market today. Hello, my name is Adam Kahn, and this is Investing with Adam K. A little bit different. I still am the rational investor in my mind, but as I mentioned in another video, if you didn't see it, I changed the handle mainly because if you search the rational investor, a lot of things come up that isn't really mine, so I thought I'd try to change it and see if that improves it. I hope you guys don't mind. I hope you're still finding the channel. That being said, before I get into the housing market and talk about why this time is different, do me a favor, smash that like button, hit the subscribe button, make some comments. Let me know what you guys think about the housing market. Maybe share the video with your friends. I know you guys are well aware that helps YouTube's algorithm. And if you're liking the content, I really appreciate the support. I hope my voice doesn't sound too weird. I think I had a bit of a cold, so it sounds weird to me. Um, let's get into the housing market. Just for reference, today is Sunday, April 21st. I think that's right. I know it's April. Um, Hope you're all doing well. I hope you're all enjoying your weekend. So what's different this time? Why are the Crash Bros wrong? And why do I actually see them giving bad advice, in my opinion? Now, this is not financial advice. You need to do your own research. You need to make your own decisions when making any financial decisions at all. You shouldn't be listening to me. I'm just some guy on YouTube. So is everybody else. I just think that the Crash Bros use a lot of clickbait and they like to talk about negativity because it drives views and people watching it. People tend to like to watch the negative things and not the positive things. So I'm going to talk about the option arm loan because that was a huge piece of the puzzle as to why we had the crash back in 2008 range. So, what is the option arm and why is it such a major deal? Well, the option arm was a loan that was being utilized that had four different options a buyer could choose when making their mortgage payment. They could choose to do a 15-year amortized payment, they could do a 30-year amortized payment, they could do an interest-only payment, and they could do a minimum payment. When their bill came each month, they had four different options. It didn't really outline what those were, but you had different payments amounts that you could make. The lowest one was the one called minimum payment. And I think most borrowers paid the minimum payment, thinking that was no big deal and they could just continue that for a long time. The problem was multifold. One, the loan would recast after 5 years to be appropriately set to make your full mortgage payment, including principal and interest. And when you were making the minimum payment, you were actually making a payment that was lower than the interest only payment, adding principal onto what you owed on your home. So you were continually owing more money on the property. The other problem with that is a lot of times borrowers borrowed the money for the down payment. So they were really coming into the loan putting no money down. So if they bought a home for, and I'm just making this up, say $500,000, after the 5 years, they would owe more than the $500,000 on the home because of the way that mortgage was set up. And then the payment would go up dramatically because once it recast to where it included principal and interest, as opposed to that minimum payment that was less than just the interest payment, it probably was multiplying 3 to 4 times of what they were paying as a minimum payment. The other thing that was going on with these loans is they also had the option of what they called stated income and stated documents. So the people didn't even have to show their income or their assets in order to qualify. So they could be working a minimum paying job and say that they made $200,000 a year, and the ultimate lender wouldn't ask any questions about that. So they could put no money down, They could lie about their income, which is why people have referred to them as liar loans. And then they could make this minimum payment that was less than what the principal and interest payment was. And it was even less than only the interest payment, allowing the value that you owe on the mortgage to continue to increase. This was a huge problem. And when they started to recast, if the market had corrected a little, which it had, you ended up owing more money on the loan than the property was worth, and now you had a much higher payment. That's a major difference than what you have going on now, where interest rates were put very low and people got into 30-year loans with really low interest rates that they're locked into. For example, when that happened, I refinanced my property. We have a 2.75% interest rate for 30 years. That is much different than an option arm loan. And to what they talk about with the golden handcuffs, I have to tell you, as somebody who has a 2.75 interest rate loan, we're one of those people that's kind of stuck in our house. Now, I'm really fortunate. We love our house. It's not a major deal. We're happy to be here. But if I were to consider moving, we could buy a house that's worth less than half of the house that we currently have. If we put 20% down, our payment with the new interest rate would actually be higher than what we're paying for our current house. Well, that's crazy. So why would we want to sell our house, buy a home that's worth half as much, and end up with a payment that's higher than what we're currently paying? It just doesn't make mathematical sense. The other thing is you need a bit of a catalyst, and the catalyst back in 2008 was those loans recasting. And the fact that people had lied about their income, they may not have been in the position to be able to even afford their new payment. While today, people are well qualified and have a low payment in the homes that they're in. What catalyst is going to happen unless there's huge unemployment, which is not the goal of the Fed, to cause a plethora of homes to come to the market all at the same time? What really drives any market is supply and demand. And right now, there is not a lot of supply and there is plenty of demand. I understand the data points that the Crash Bros are pointing to about the income levels versus how much the homes cost and things of that nature. But so long as supply and demand is balanced, or in the case of how it is currently, imbalanced to what the market would need to be to cause it to go lower. I mean, the reality is there's not enough inventory to support the demand, which is why the prices are continuing higher. But what's going to happen? What's going to change that? At least right now, I don't really see anything on the horizon. And last time, when those option arms all recast and people went from, again, making the numbers up, $800 payments to somewhere between $2,400 and $3,200 a month payments on a house that was worth less than what they owed on the mortgage, that's a big change, especially when maybe you can't afford the new payment of $3,000 a month. Now, I also understand that right now property taxes and insurance are going up. But your principal and interest, if you bought when the interest rates were low, is locked in. And while you might be complaining about the higher property taxes and the higher insurance, I'm sure you're well aware that your total payment is still relatively inexpensive, which is why they call it the golden handcuffs of people that are locked into these low interest rate loans. Even when I look at rental prices, for what we pay for the house we live in, it makes absolutely no sense to go and rent. I think this is going to cause there to be a lack of inventory for a long time because the new home builders, well, they learned their lesson back in 2008 during the great financial crisis. They when I moved out to Vegas in 2005, there were guys all along the streets with these signs just going like this with the directions on how to get to all the new home builders. When you were get out there, they were putting up tons of homes, and you could buy a home and close within 2 weeks or 4 weeks because they were building so fast to meet the demand. Well, now the way that it works is they don't start building until you put a deposit down. You also pay for any upgrades you make in advance. So you're putting a lot of money down in advance before they start building the home. The homes that are standing inventory are just properties that fell out of escrow for some reason. And in a lot of instances, the new home builder actually collected that down payment of money that they put originally in as earnest money. So they have money already to be able to weather a bit of a storm and cover that expense and relist it as standing inventory. Last time they were building in advance of people buying, so when the market started to correct, all of these home builders got stuck with a lot of properties. Much different this time. This is also why we don't have enough properties to meet the demand. The new home builders aren't just building and building and building to meet that demand. They only build when somebody puts their deposit down. So while I understand a lot of you are upset that you missed a great opportunity when the interest rates were low and the house prices were less expensive, that doesn't mean that the market has to crash. I think that's what people hope for so that they can afford to buy a home at a cheaper price, but I don't see that as something that's really going to happen. Again, you need to do your own research. You don't have to listen to me. I just hate seeing people not buying, waiting for some huge correction that may never come. Maybe we have a small correction, but maybe not. I mean, the Fed's seen and made it very clear that they don't even feel the need that they have to cut rates because the economy is strong enough that inflation is holding around 3.5%. Well, homes are inflationary as well. If things are going up 3.5%, generally homes are included in those things. Just keep in mind, everything now is much different than it was in the great financial crisis. And generally, in the long run, house prices have a tendency to go up. That was the first time houses had a big crash across the nation since the 1929 crash. Go ahead, you can research it, look it up on Google. They'll give you all the prints and show you the house fluctuations. Generally they don't go up as quickly as they have of recent, which is why everybody's talking about some big correction. I just don't see the correction coming because things are so different this time. And yes, markets are markets, and markets have ups and markets have down. But what I mean is so different is you don't have those loans in place. You shouldn't have that big banking crisis that puts a squeeze on. And the thing is, when people were lying about their income and their assets and putting no money down on the properties, that's just a recipe for a big problem. I think the banking industry got a little too greedy back then. I remember it. I'm old enough that I could remember how the lending practices were, and it was really awful. At this point, when people buy a home, they go through a whole, like, you'll hear people complain about how difficult the process is and how much information they need to give to prove their income, to prove their assets, and to prove that they're well qualified to purchase a home. So if you have a bunch of well qualified home buyers in the market, it's really hard for them to all panic and sell at the same time, which is what you really need for a crash. Now, maybe there'll be a black swan, maybe we'll have a huge war, maybe all sorts of things, but maybe not. So that's my advice. Have a great rest of your day. Have a great week, and I hope to talk to you soon. Again, new name, Investing with Adam K. Thumbs up, like, subscribe, make comments, and share with friends and family. Have a great one. Bye bye.